Hi, Paul.
Hey, Ville. How's life?
Life is good, but did you hear that? What an awesome introduction to our first ever live episode. So thank you.
It was, wasn't it?
Yeah, thank you.
Yeah.
Thank you for that, Chris. Now, fortunately or unfortunately, I know exactly how to take the air out of the room after an introduction like that. And I guess our listeners will know what's coming next, which is the question. Paul, do you have a joke for us?
I do indeed, Ville. I do have a joke. So I'm wondering, Ville, what did the football coach say when he went to the bank?
When you say football, I of course assume it's the real football, so the American version of football. So
Absolutely.
Okay, but yeah, I don't tell me.
I want my quarterback.
Oh God.
And I would like to say, I mean, that joke was sent to us by Tommy Välimäki, who is based in Helsinki. So Tommy, thank you very much.
Thank you, I guess, is the words we're going to use.
Yep.
But okay, let's. The air is out now, so let's see how we can manage after this one. But hey, hello, dear listeners, and welcome back to Fintech Daydreaming. And this time also, for the first time, welcome to our live audience at the Nordea Insights Day. It's an absolute awesome experience to do this live for the very first time. And even though our audience is virtual, I can assure you that they are probably all give us a standing ovation right now. So
I'm positively sure of that.
Exactly. So it's slightly terrifying to do this live, but I think it's gonna be a fun experience. Now, for the people in the audience who are wondering who on earth are these guys and what on earth is Fintech Daydreaming, we are a podcast that dives into the world of banking technologies and the ever-changing landscape of fintech companies. We want to bring out real-life examples from guests and experts across the board, and we were kindly invited to record live here at Nordea Insights Day, and we thank you for this opportunity. This is going to be fun.
It is.
We are at Fintech Daydreaming, even when recording live, seeking out interesting fintech stories and insights ranging from emerging technologies to game-changing disruptive ideas brought to us by big banks, like Nordea, technology companies and fintech startups, all seeking to challenge the status quo with revolutionary ideas and big fantastic dreams. This, my friends, is Fintech Daydreaming. And welcome back to the show, everybody. I'm Ville Sointu, and I will be your host today. For this episode, my co-pilot, well, actually, as always, will be Paul Krogdahl, who is sitting next to me this time, which is, of course, unusual in these times, but we decided to take the leap and do this at the same location. So, Paul, how is life?
Life is really good, and it's fantastic to not only be live with everybody at Nordea, hello, but also to have the opportunity to actually record a podcast with us in the same location.
Yeah,
right?
Same microphone.
Same microphone as well.
Oh
Yeah,
my God.
it's fantastic.
Yeah, indeed. Now, because we're live, we will have a slightly different show than usual. First of all, we will have questions from the audience in the end. So, audience, please do ask questions, and we will try to answer them in the end. And of course, if there are no actual questions, we do have an emergency backup plan, and I'm looking forward to seeing how that crashes and burns if we get to that. But we're of course hoping that we will get fantastic questions from the audience. The second thing is that it's going to be a bit of a shorter episode as we are pushed for time in the agenda, but I think we're going to have packing a lot of interesting content into this regardless of the shorter time frame, but no pressure whatsoever. But yeah, one segment we of course couldn't skip is the joke in the beginning, and that was actually pretty horrible, Paul. How are we doing with the upcoming episodes? Are the jokes still coming, or?
We are actually getting a nice flow of jokes coming in. It would be nice to have more, so that we've got a nice selection to pick from. And now that we've got such a captive audience from Nordea, we'd love to have you send us some jokes at hello@fintechdaydreaming.com. Send us your jokes and we'll give you a shout out on a future episode.
Yeah, and one thing is for sure, we do have awesome listeners, and hopefully have some new listeners as well after this live event. But as someone famous once said, and I think it wasn't me, on with the show. Today we are going to bring back, by popular demand, an interesting topic that we talked about on the very first episode of season 2 of Fintech Daydreaming, and that is central bank digital currencies. Now, a lot has happened since the episode we recorded about CBDC earlier, and I thought that this would be a fantastic chance to have a kind of a bit of a refresh into the topic and bring in maybe a bit of a different perspective than the one we had last time, and that, of course, is the perspective of a retail bank like Nordea. So without further ado, our guest today is Johanna Lybeck. She is an executive advisor at Nordea, and she has an incredible amount of experience working in this space with central banks, the Swedish Ministry of Finance, just to mention a few of the things in her career. Today, she's one of Nordea's leading experts in all things financial market infrastructure, including central bank digital currencies. So bring in you, Johanna, now. So hi. How are you doing this morning? And could you maybe talk a little bit about your background and your current work at Nordea?
That was like 3 questions in one. Good morning, all. I'm really glad to be here. And in fact, I'm a bit terrified because I'm an economist by trade. So to be along these exceptionally talented technology experts is making me a bit scared. But I think I will try to bring in the economist perspective in this. And as Ville said, I have basically been working for the government or the state my whole life, with the central bank, both on financial stability and monetary policy and EU affairs, with the Ministry of Finance, trying to deal with the 2008 crisis, and then later on as the state secretary responsible for the regulation of the financial markets. And then in 2014, we lost the election, so I ended up without a job. That is how democracy works, at least on this side of the Atlantic. Let's see what happens on the other side. And I realized I had never worked for the private sector and decided to give it a go. And 5 years later, I'm still here. But continuing to work on the regulation of the financial sector in a broad sense.
Excellent. I think you are exactly the right person to talk about this topic, because me and Paul, we tend to steer towards technology maybe a little bit too much. So good to kind of bring a little bit kind of sense into the conversation, if you will. But okay, let's get right into it then. Johanna, I mean, we're talking about central bank digital currencies, or fondly known between friends as CBDC. And of course, you are exactly the right person to tell us and our listeners all about it. But before we get to the kind of weeds of this topic, let's get some of the basics covered. So, Johanna, maybe in your own words, what is central bank digital currency? How does it differ from the money we use every day using the digital channels and mobile payment options that we have already available? And most importantly, should we as regular consumers or citizens pay any attention to this topic whatsoever?
Again, 4 questions in one or something like that.
We like to keep that.
Okay, so basically all the digital money that we use today is what is known as commercial bank money. You have put your salary or other money into your regular bank account or savings account. That is known as commercial bank money. So what you as a private person have is an exposure on your bank, right?
Yeah.
If you are holding physical cash today, that is actually a claim on the central bank or the state, because it's issued by the state. That is basically the only way a private individual today can hold a claim on the state and the government. So let's take a look at CBDCs. That is actually intended to be a form of digital cash. So a claim on the central bank, the state, in the digital form. So that is the big difference. And when we look at these sort of types of systems, there are several distinctions that could be made. One is, do you aim for a wholesale CBDC system? And that means that it's only the banks that access the digital currency and then transfer it to the private customers. That is actually what we have today. We as banks give in collateral to the central banks and we get liquidity in turn that we push on to our customers. So we actually have digital central bank currencies today in a wholesale system. That is the normal way monetary policy operates. What we're talking about here and where some of our concerns come up is the retail form of CBDCs. That means that the digital central bank currency is directed immediately towards households, corporates and authorities in the form of a claim on the central bank. So those are the two distinctions, the wholesale and the retail. Then there are two sort of technical ways you can do that. There are several technical ways, but there are two main forms. Either you can think of it as account-based. So you as a private individual will have an account with a central bank, which is of course not possible today. It's only the banks that have accounts with the central bank. And then it would be registered on your account and a claim on the central bank. Or it could be value-based, like tokens on an app or a card. And that actually introduces some new problems because then it could potentially also be issued anonymously. So in the end, for the individual, it's a question of, do you want to have a claim? If there is a central bank digital currency, do you want to have a claim on a private bank through your normal deposit account, or do you want to have it on the central bank and the state?
Yeah. I think in my mind, one of the kind of interesting things here is that even the central banks, when they do this digital currency, they cannot break the difference between kind of the money that we already have our bank accounts and the central bank money. So they kind of have to market a thing that they cannot market if they want to do this, because if you start to draw differences between the retail bank money and the central bank digital currency, then you're threatening to almost like break the system, if you will. So I think that balance is going to be interesting to see how it's going to play out, because ultimately the same reasons as people are getting cash in their wallets today, or at least some of them are hoarding cash, is because they don't trust the retail banks. So maybe that trust question is going to be one of the topics.
But if I may, Ville, I mean, I'm not sure the reason people are holding cash is that I actually want to have an exposure on the central bank. I'm not sure everybody realizes the distinction on who you're having the exposure on, and in fact we do have deposit guarantees to cover for whatever risk you're taking on your private bank. And in fact there's been studies, at least in Sweden, which shows that the trust among the general public is higher for cards as a payment method than cash. And that is of course because cash is connected to some other problems, namely financial crime.
Yeah, that actually leads me to a related question to that from the Nordea perspective, or even from general mainstream banks. If or when CBDC becomes a reality, let us say that the ECB launches a retail digital euro and opens up access to fintech companies to connect to the digital euro more broadly. How do you think that would affect the banks like Nordea and their sort of traditional business models?
That is a very good question, and in fact it is the key question in my mind. And the sort of first answer is that depends on the demand. So let's assume there is a big demand on a digital currency issued by the central bank. What would happen then is that the deposits that banks currently finance themselves with will of course go down, because I will take out money from my normal deposit account and buy e-euros or e-kronas instead. And when the retail banks lose deposits, the first thing that will happen is that actually we break all the liquidity requirements that are put on us as banks. We need to have liquidity, and deposits are a very important part of that. So we will break the liquidity requirements that are put on us if there's a large demand. And then the money ends up at the central bank. It's a claim on the central bank, right? Yeah. What do we use the deposits in the bank? We use them to extend credits to the economy, to the households and to the corporates. So if the money is no longer with us, the deposits have gone to the central bank instead, that means that we cannot extend credits in the same way that we are currently doing. And to avoid a credit crunch, so a contraction of the credit extended to the economy, there are several ways you can solve this. Either the central bank can lend the money back to the commercial banks, but then we need to post collateral in the form of securities, which we always do in monetary policy operations. And that would, of course, make lending more expensive, because then we need to buy the securities and post them as collateral. So that would be one option. The other option is that the central bank directly themselves start to issue credits. Otherwise, we would have a credit contraction. So this is my main concern, because think of a situation, and it's actually not more than 12 years ago, we had a huge financial stress in the world. And if there is either well-founded or not well-founded reasons to suspect that your bank is not stable or the whole banking system is not stable, you would be very quickly to move out your money out of that bank. That is known as a bank run, right? And instead move it into an exposure on the government. And I would suspect that our corporate customers that have quite a lot of deposits and much more than what is covered by the normal deposit guarantee would be quickest in finding this option and actually move out their deposits. And that could sort of lead to a negative spiral on financial stability as regards the financial system.
Yeah, I think we're kind of steering towards the kind of political implications or macroeconomic implications of CBDC. And to that point, one of my favorite industry pundits, Dave Birch, has been actually wrote a book about the topic of currency cold wars, the kind of implications of future digital currencies and the political impact that nation governments will have, even globally, when they start distributing digital currencies. And I guess these tokens and this digital cash are going to be the kind of weapons of choice, if you will, in this kind of new currency cold war. So, Johanna, what do you think about the kind of global political implications of digital cash? Let's say, for example, that the Chinese central bank wants to distribute digital yuans, for example, globally. What would be the political implications of that type of scenario?
Again, a very good question, and I think you are right to the point. I mean, it is very clear for me that when you look at the objectives of the European Union, they are constantly looking to strengthen the global role of the EU, the global role of the euro, the sovereignty of the euro. I mean, you do have this new EPI project, the European Payment Initiative, which actually aims to try to find ways to replace the dominance of non-European players in the European payment market, i.e. Visa, MasterCard, and that could also include Chinese payment methods. And currently we are seeing more than 60 central banks around the world working on some form of CBDC, albeit for different motives. I also think it's very clear from listening to the governors of the ECB that the main driver behind what they're doing is actually the fear of stable coins and Libra in particular. That is what they constantly come back to. And there's another aspect of this currency war as well, particularly within the EEA. So let's say both the ECB and the Swedish Central Bank decides to issue a digital form of their currency. It would not be, to my mind, possible to discriminate within the EEA and the single market. You would need to allow also other nationalities within the EEA to also buy this digital cash. So let's say you're a Dane and you're uncomfortable with your private banks and wants to have exposure on any government, and you would feel more safe. You would start buying e-kronas or e-euros. Well, that would, of course, if there's a large flow, have an effect on the foreign exchange rate. And if you're a country like Denmark with a fixed exchange rate, that could quickly run into trouble for that country. So there's another aspect of this currency war thing.
Yeah. And we kind of casually dropped the Libra word into the conversation there. So Facebook's Libra, of course, is one of the most, let's say, prominent projects in the kind of digital currency space of late. And we've to a certain extent covered a little bit of that in the previous episodes. But just for the benefit of the listeners here, can we maybe describe a little bit on what is the connection between kind of these private money initiatives like Facebook's Libra and how does it compare to central bank digital currencies? Or do they connect at all? And what is the link there?
Well, the similarity, I mean, I'm not a technological expert, but the similarity is, of course, that it's a digital value of some form, right? A central bank, and having been a central banker for quite a long time, you would argue that that is actually not money. I mean, we're almost ending up in a philosophical question here: what is money? But the central bank would argue that it needs to have a stable value. It needs to have a sort of general acceptance as a means of payment, and it has to be backed by a state. That would be the central bank definition of what is a currency. And that's why you see, for example, the new proposal of the EU Commission into trying to regulate the cryptocurrencies. They don't call it cryptocurrencies, they call it crypto assets. Because to a central bank and to a government, this is not currency. Currency is always backed by a government. So there are similarities, it's digital, but a central bank would say this is actually not currency or money in the way we talk about it normally.
I suppose you're hitting onto a very critical point there, which is one of the main differences is around regulations and the regulatory protection of, you know, whatever assets, whatever form they are in, and how they are backed, right? At the end of the day, banks are insured, which means that if the banks end up in liquidation or disappearing, at least your assets that are stored by the bank are insured and you get access to it. Whereas a private organization owning your assets, be that Libra or anything else, there is a concern about how that is managed from a regulatory perspective, right?
Yeah.
Absolutely, and really, I mean, it's not only the deposit guarantee schemes that are controlling banks. I mean, banks are probably the toughest regulated entities we have, and there is good reason for that. I would say that even as working for a bank, because when banks go bankrupt, we cause a lot of problems for society. Yeah. So there is supervision, there are prudential rules and conduct rules, and deposit guarantee schemes. We are very heavily regulated and should be so. That is fine. And I think for the sort of crypto assets, this is a problem also for regulators, because they can try to regulate it within the EU or any other jurisdiction. But let's face it, you can put your server anywhere.
Yes. Yeah.
So how do they really get to that? That is fairly problematic. Yeah. I mean, you can limit how much you can buy it on a regulated market within the EU, for example, but you cannot keep it out of private individuals sort of want to invest.
Yeah, and I think what kind of really brings this home right now and kind of starts to put together the kind of picture here is that you, Johanna, you mentioned the upcoming regulation, the proposal that is coming from the European Commission right now, the markets in crypto assets regulation, which gives crypto assets like Libra a bit of a more formal standing now, because they are classified. True, yeah. I mean, at least the way I would interpret their classification is that they would be considered as significant e-money tokens going forward if the MiCA regulation goes through. So yeah, we're going to be seeing some very interesting movements in this space, I think, in 2021 for sure. And the other side of the conversation, of course, is the digital euro paper that came out of the European Central Bank, where they describe different kinds of scenarios of what could a digital euro look like and whether or not it should be rolled out. Yeah, I think just summarizing that paper, I think it was mostly kind of almost like defensive positions, if you were talking about the kind of in this Cold War terms. So they were saying that they might step in with the digital euro if the market it starts to look like that it's the European market is being penetrated by either private or other government digital currencies.
Which is understandable, right?
Yeah, of course, yes. Of course. I mean, that's their job.
Yes.
Yeah, and then we come back to the issue of the position of the euro in the world, right? And the sovereignty of the euro. But I also found that paper exceptionally interesting because they were talking a lot about the motives for having a digital euro, and it's basically the same that all central banks are using, which I said some are valid and some are not. But the other thing is that they all recognize this financial stability problem, and there's actually also problems for monetary policy that we haven't got into today. And then they are trying to find ways, and I think, Ville, that you alluded to this somewhat, that they are sort of contemplating, should we put limits on how much digital euros or digital kronas that a person could hold?
Yeah.
And that would, of course, be a way to limit the risks for financial stability and monetary policy and the susceptibility of risk to the economy. But what if there's a huge demand for digital euros? I'm prepared to pay 1.1 of my private Nordea bank money to get 1 digital euro. So then we would not have a stable value of the euro or of the krona, which is one of the main features of what is a currency and is very important, the stable value of your currency.
Yeah.
So they are sort of stuck in the middle with this issue.
Exactly. And I guess we could be talking about this forever, and I'm sure we're going to have some interesting conversations even after the recording is done. But unfortunately, my friends, time flies when you're actually making history, being the first live broadcast and everything. But it's time to start closing this first live episode of Fintech Daydreaming. But before we go, we need to get to those audience questions that we talked about, and this is the part when we of course expect everything to fall apart. So either we're going to get some good questions, or then we're going to be kind of doing some improv comedy here later on. But Chris, do we have any questions from the audience?
Yes, we've got a couple. If we can just, I suppose we can try and get through them quick. But thanks for a really fascinating chat, by the way. It's super. First one. What's in it for a central bank to issue a digital currency? What do they expect to gain?
I think Johanna would be perfect to answer that one.
Yep.
It a little bit goes back to the motive, actually. First of all, I think some of them want to be modern. I mean, cash is a physical thing, and we don't do things that much physical nowadays, particularly during this pandemic. But we're moving to digital payment methods, and they want to follow their time. Another aspect is that, in fact, the income stream for central banks is actually coming from issuing cash. So they take cotton, they write some numbers on it, the governor puts his name, and they sell it for 100 euros. That's how they make money. It's called seigniorage. And if there's no cash, there's no income. So that would be another driver. And then they have given several arguments for why they need to have digital euros. And it ranges from to reach the people who are not digitally included. There is no trust in the payment system if there's no central bank payment method. There's no competition. They don't trust private banks. I mean, there's a range of issues. Emergency preparedness has been another one that they have mentioned. So they're trying to solve a lot of sort of motives by issuing a CBDC.
I suppose also the ability to stifle criminal activity to a certain degree as well is a relevant benefit, right?
Which often speaks against the anonymity part.
Yes.
Yeah.
Avoid the anonymous CBDCs, which we, from an Nordea perspective, are very hesitant of, to be honest.
Yes. Just time to squeeze one in. Is it true that we already had a central bank digital currency in the Nordics in the 90s? What happened to that?
It is true, absolutely. Yeah, there was a paper very recently. You picked up on that one, right?
Yeah, exactly.
Yeah.
I mean, in the 90s in Finland, there was this cash card called Avant Cash. And it's actually really interesting that it was a central bank backed setup. Later on, it became a normal kind of retail bank cash card, but it started off as a central bank digital currency. And funnily enough, and we will put the links into the show notes so you can do your own reading on this topic. But funnily enough, many of the same questions that we raised today about the future of CBDCs and whether you need it or not, especially from a kind of regular citizen standpoint, all of those risks came true. So. Yeah. People found it difficult to motivate. Why do I need a separate cash? Why do I need to pay a fee to top it up? Why do I need a separate acceptance infrastructure from a merchant standpoint to start accepting these type of things? And it just fizzled out. And I think none of those questions are properly answered even today in these kind of CBDC conversations that we're having.
I suppose one of the biggest difference was that we're a lot more digital today than we were then.
That's true.
Right?
Yes.
So the move towards digital that lends itself towards the sort of adoption of CBDC.
Yeah. But fantastic, and thank you again, Johanna, for coming on the show and sharing some great experiences and insights into this topic with us and our audience. But most importantly, thank you to our listeners and our live audience today for hanging out with us for another episode of Fintech Daydreaming. Now, do you have a fintech subject you would like Paul and I to cover in a future episode? Or maybe you have a great story to share and would like to join us as a guest, which would be, of course, fantastic. Or did you come up with a banking joke that me and Paul can, me or Paul actually can share with our listeners in the beginning? And
give a shout out.
And give a shout out. So your reward for giving us a joke will be that you will get a shout out in the podcast to our millions of listeners around the world. Anyway, ping us on LinkedIn, Twitter, YouTube, Anchor.fm to get in touch. And I guess it wouldn't be an historic episode if we didn't have something in terms of news to share as well, which is that we have finally registered our own domain.
We have, yes.
So if you want to reach out to us, you can write us an email at hello@fintechdaydreaming.com. Yes, and that is fintechdaydreaming.com, where you can send us an email, and you can even go to the website, which will lead to the Anchor page, but we're working on that as well. Now, Paul and I will be back in 2 weeks' time with a new guest, so see you all again then. This has been Fintech Daydreaming.